risk, the marginal risk is actually for a recession. We talked about this before. By the way, just to your point, you're right that we pumped in $10 trillion, but over the last 3 weeks, and really over the last 2.5 months, we have actually eviscerated $10 trillion of value as well. So if you want to measure it, we put 10 trillion of excess capital in, but we've now destroyed $10 trillion of equity.
Destroyed it by lowering the prices or repricing stuff. Yeah, we've repriced
equity,
everything.
Crypto. I mean, crypto in the last couple of days has just been shellacked. Yeah. Growth stocks have been shellacked. Biotech stocks have been just absolutely smoked. Everything is getting crushed.
COVID stocks.
But David is saying something really important. The risk, in my opinion, is not of runaway inflation anymore. And the reason was what happened this weekend was incredibly important. And we have seen this happen just a few years ago. So this weekend, China cut interest rates. Now, as we know, we are dealing in the United States with this issue of whether we should raise rates and by how much, because we're worried about inflation. Well, if you're cutting rates, it's because you're worried about the other problem, which is that the economy is basically turned over and you need to become more accommodating, right? You need to incentivize businesses to spend by lowering.
By turned over, you mean it's slowed down. People are not building, companies not doing new projects. So you want to give them an incentive or maybe some catalyst to start some new company or start some new project because all their real estate projects have wound down.
In 2018, here's exactly what happened. The setup was the Fed, everybody was worried about what the Fed was going to do on interest rates. The Fed was looking at China as the canary in the coal mine, the leading indicator of what we should do. And at the end of 2018, Jerome Powell decided to raise rates. And we raised rates. And then enter 2019, and the Chinese economy turned over. And we realized that their economy was not nearly as strong as we thought it would be. And so our reaction was disproportionate to what the actual data on the ground said. We entered a recession in 2019. That's when you guys probably saw Trump going crazy, blaming Powell. I mean, most of us ignored it because, we were all dealing with, Trump derangement syndrome. But the underlying thing of what he was saying was, hey, hold on a second. You just caused a recession in America by raising too quickly. The Fed is now in this really delicate situation where China cut rates last week. We have an FOMC meeting, the Open Markets Committee that sets rates on Wednesday, I think, of this coming week. What is he supposed to do? Bill Ackman 2 weeks ago was advocating for a 50 basis point raise in this meeting. So that's way beyond what people even thought is supposed to happen.
We should just remember that Bill Ackman has bets, macroeconomic bets in the market. If he's calling for a 50-point raise, I guarantee you,
he's going to make a lot of money.
He'll make a lot of money if there's a 50-point raise.
No conflict, no interest. Yeah.
Exactly.
But my only point is the setup is a very complicated one for the Fed coming into this week. And the risk is to a recession because if we overcorrect, and the leading indicators all around the world tell us that their economies are weak, then inflation may have actually been much more transitory than we thought. And right now we have to decide, because if we overcorrect, we're going to plunge the United States economy into a recession. We have had more activity and hedging than in any other period in recent memory, except the great financial crisis. Just to set the tone of where we are in terms of volatility in the capital markets. Mutual funds who don't short stocks, right? The multi-trillion-dollar mutual fund complex whose only job is to buy has been a net seller. Hasn't even started buying a single thing yet. We have an FOMC meeting that's going to happen next week where Jerome Powell and the Fed has to decide what to do in the face of incomplete data. It's not as if we've even stopped all of the purchasing of assets that we've been doing. We're still putting money into the system. I just want to be clear. We were debating when we stop the spigot. We're not even debating when we shrink our balance sheet as a country. So we are in a really complicated moment. And I think the risk is that there is an overreaction to incomplete data and we plunge the US economy into a recession. And I just think that has to be really thoughtfully measured. And we've seen this in 2018-19. I think we're in the 8th inning of the tech drawdown. So
got it.
If you're a high growth tech company, you've been smashed for 3 months in a row. As you said, Jason, we're off. Some stocks are off 50 to 80% of their highs.
That's like .com era correction.
Yes.
It really is.
That's crash. That's
It
.com
really
era
is.
crash
Yes,
occurred.
yes.
If you're in other areas like value, you've had a pretty good rally. If you're in crypto, you're just starting to get smoked now. If you're in
why isn't crypto? I want your thoughts on this, Chamath. Why isn't crypto getting smoked like Peloton and Zoom? Is it because those people are hodlers or something?
Well, crypto, I think, has slightly different dynamics than individual stocks like a Peloton. But I think that you're going to see
earnings release for one.
Yeah, right, but you're going to, because like you have to understand
all that the market is who's bidding and who's coming into the market. I mean, there's still thousands of millions of people from around the world stepping into the crypto markets each day that are putting more money into these markets, and that balances out the withdrawals. And that's all that crypto is. There's no fundamental underlying business that you're valuing.
The Peloton release was really bad. Okay, I mean, really,
it was very strange. Yeah, I think they overproduced.
I don't think it was strange. It was just like we're just going to basically stop producing anything because all of our inventory will meet our demand for the foreseeable future. That's not a good statement if you're supposed to be a high growth.
Okay, so if we're seeing business. 50 to 80% sacks,
Gavin Baker had a tweet that
capital
said
allocator.
Yeah, the bottom of the market. And it was a phrase something like when we shoot the generals, and his comment was the generals are big tech. When those things trade down 25%, the bottom is in. And I think that collectively, most people think that we're a little bit oversold in all areas except big tech. I think big tech is down 10, 11, 12%. When you see this thing really get cracked is when those folks, trade down another 10 or 15%. And then I think we're kind of through most of the pain. Big tech, you have to remember, is basically the index. And in the last 10 or 20 years, you've never seen drawdowns more than 15 to 25%. You've never seen it. And when you've ever had a 15 to 25% drawdown, meaning the market goes off 15 or 25%, you have to remember the thing that we have also done over the last 20 years is created so much money on the sidelines, always looking for a cheap buying opportunity. And so the minute that these things, so even, in March of 2020, remember when we started to do this pod and it literally looked like the world was ending?
Yeah.
The bottom existed for a week.
Yep.
And then within a week, the entire 25% loss in the stock market was wiped out and we were back to normal.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much, much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.